Why focus on owning 5, 10, 15, or 20 stocks when we can catch them all? You can buy a rental property, you can have a business, or you can decide to invest your money in the stock market. And many stocks paid what is called a dividend. I can't blame you. I love them too. We love dividend paying stocks. I get paid, you get paid. What's wrong with that, right? But where does the issue lie, you might ask? It's easy to forget that dividends are paid by corporations. Many companies make money, and sometimes they have a ton of cash on their hands that they don't even know what to do with it. So they pass it to the shareholders. They giveth and they can cut it. They can take our precious dividends that we work so hard for. Remember, these companies aren't loyal. And that brings me to today's topic. What are dividends? A dividend is a distribution of a company's earnings to its shareholders and is determined by the company's board of directors. Dividends are often distributed quarterly and may be paid out as in cash or in formal investments in additional stocks. In a nutshell, companies will pay dividends to its shareholders. That's the beauty or the dark side to some people. Picture this. Let's say you really love AT&T. For whatever reason, you buy shares every month. So one day, wake up and learn that AT&T has cut their dividend. How would you feel if your favorite stock will cut its dividend because they're in financial problem? How would you feel? It's an easy pill to swallow if you ask me. How you as an investor can mitigate the inevitable? It's quite simple. We have this thing called an ETF, in particularly SHD. Why focus on owning 5, 10, 15, or 20 stocks when we can catch them all? One reason to own this ETF or any other ETF you like is that we don't have to like these companies. As a matter of fact, you don't even have to track any of these dividend stocks because the ETF will gut out any stocks that it's not doing its work, that it's not working for you. It's that simple. You can have this love and hate relationship with all these companies within this ETF because again, you don't have to worry what they're doing. The only thing you have to track is the ETF. As long as the ETF is working for you, it's doing what it's supposed to do. And the beautiful thing about this is that you don't have to average down. And let's say if you have 10 stocks, you don't have to average down on 5 or 10 or whatever that you have when the market crashes. With one ETF, you can, by buying the same ETF, you will literally average down into all these companies at once, right? So like SHD went from 75, let's say, to $73, and I'm down, I'm negative in my portfolio. It has happened, it's happening now. I am at a like $200 loss on my ETF. On paper, I'm not selling, but every time I put $1 in, that dollar is gonna average down the ETF. And I don't have to worry about certain stocks not performing because the ETF, it's passive, meaning there's no an arbitrary person deciding what to do or what not to do with the stock. And if they should keep the stock in the fund because it's not working, the fund tracks certain companies because the ETF test these companies. If these companies are not working for you, then the ETF, like I said, will kick them out. So I buy this ETF every day. If God forbid, something happens with this ETF, I'll just move to another ETF. But as long as SHD keeps performing the way it has been performing in the past 10 years, and right now the economy is devastated, right? The banks are raising interest rates, companies earning are down, so all these things brings the entire market down. It has like a boot on the market, all these things that's going on in the world. And I just focus on this one ETF, and this ETF does it all for me. That's the beauty of SHD. If you would like to receive more contents like this about SHD and the stock market, please subscribe and don't forget to like. I'll see you in the next one.